Against a backdrop of rising living costs and inflation, the South African Reserve Bank's Monetary Policy Committee announced a 25 basis point cut to the repo rate. Now it brings it down to 8.25%. And of course, the prime lending rate now sitting at 10.5%. And while this easing move may offer some relief to borrowers, inflation, of course, has now also edged up to a 4-month high, raising questions about how much real impact this decision will have on South African households at large. And so today, we're going to take a closer look at what this all means for consumers and business confidence and economic stability, both domestically and globally. We also observe Women's Month, and so we're going to be asking what this also means for the financial well-being of millions of women-led households and small businesses. Annaline van der Poel, on that note, Debt Rescue COO, joins us to chat further. Annaline, good morning, and thank you for your time at this hour.
Good morning, and thank you so much for having me.
So, Annaline, domestically, the MPC obviously has now lowered the repo rate despite inflation ticking upward. Talk to us about the rationale behind this decision, but also how much real relief consumers can expect from this rate cut, especially of course, given the household debt levels, the high costs of food and transport costs at large.
Well, I think looking at the current factors and what's been happening over the past couple of months, it's been almost there's been no other choice but for them to start reducing. Unfortunately, though we are thankful for the reduction finally, again, very small. So the percentages are very, very small, and the real relief is limited, because we've got to remember that a 0.25% is just at this point being nullified by all the other increases we're seeing in other areas. So transport prices that fluctuate so much, electricity prices that are going up, etc. So we're thankful for the little bit of relief, but realistically, so many factors playing a role, and very, very possible that this could be, if all the other factors start coming into effect, that this could be the last time that we see a reduction for a while.
Well, obviously monitoring all those dynamics, that's our domestic picture, because globally we also need to look at what's happening, interest rate trends in the US, how that also impacts emerging markets like South Africa. Even if we're looking at the rand, which remains vulnerable, but obviously there are external and internal factors that's keeping it under pressure. But obviously the big talker, US tariff imposition, that cloud hanging over us, time also running out. Talk to us about sector-specific impacts also that we're likely to be witnessing due to these global changes and trade policies at large.
Well, absolutely, and I think that's been probably one of the biggest factors and the biggest unknowns that we're having to look to try and forecast and look into this crystal ball and say, okay, well, what's the effect going to be? Realistically, where we stand right now, the 30% hikes have now kicked in as of Friday. So what this means is we've got specific industries that we know of upfront that are definitely going to be affected. This would be agriculture, wine, vehicles, manufactured goods, anything that the US is importing ultimately from us is going to be affected by these hikes. And what this is going to mean is that the American consumers are going to be paying more. There's thus very likely less buying of same. There's thus for us as a country less exports, and the US is a very big export market for us. So the ripple effect of that would then potentially lead to businesses slowing down or even closing because of this. And that definitely has a very big impact on our economy as a whole.
Because, on the back of that then, Annaline, we're trying to look at the positive and whether there is a silver lining in the rate cuts. Is this an opportunity for debt restructuring, easing credit stress as well? But also, if we're looking at what more could be done to help cushion the most vulnerable, particularly women-led households, tell us a little bit more about what the possibilities and probabilities are at this point for us.
Well, it is a silver lining. It's just a very small one, because, like I said, unfortunately, realistically, when we look at what our budgets look like, most consumers have already cut back as much as they can. So where this little bit of cut is going to give a bit more, money available in the budget, it's just being consumed by other living expenses that have gone up. And we know that, yes, CPI has now come in a little bit higher, but one of the biggest factors that contributed to this increase has been food. So when we speak about women specifically, we know that from research that we've done, we still sit in a position where we have a lot of women-led households, but also generally in your dual households, women tend to be the ones who are doing the grocery shopping. That is still still, largely, one of the realities that we face. We will be the ones who go out and do the budget shopping and the grocery shopping, etc. So we're the ones who notice the prices first. We're the ones who are having to get creative and, bargain shop, look where the cheapest prices are. And a lot of the times, realistically, unfortunately, when it comes to the till, we're the ones who have to make the decisions of the items that get removed from the basket and go, okay, this is now borderline, what used to be an absolute critical item is now considered a luxury. And that definitely is where we see the impact on the gender roles, if you want to call it that, in terms of who sees the impact first. Most likely us as the women, because we tend to be the ones doing most of the grocery shopping.
And that's why a gendered economic outlook is so important as well, given the circumstances. Even if we just look at more context, I think for people who don't understand how economics work, perception management, asthma, investor confidence. Tell us a little bit more about the move now to reduce the repo rate by 25 basis points. If that could compromise SARB's inflation targeting credibility. I'm asking this because some are questioning whether it's just a strategic adjustment based on some of the more short-term forecasts, but also how does the rate cut then align to South Africa's broader fiscal picture, given the budget constraints and our debt servicing costs and the sluggish growth that we're currently experiencing as a country?
Look, I mean, it's necessary from the fact that, obviously SARB has said that they are leaning more and more towards the fact that they want the 3%. If anything, that is where they want to set our goal. Yes, 3 to 6 has been the band within which they want to operate, but they want to try and keep inflation at 3. And we have been there for a significant number of months now consecutively. So technically the boxes were ticked, and it is the right thing to do under the current circumstances we're facing. So from SARB's perspective, we know SARB is very, very close to monitoring it. They are very cautious before they do interest rate reductions, etc. So we know that this has obviously been, yes, it is strategic, but it's strategic from a domestic as well as an international view that they are taking, as well as some of the history and where we stand right now. But what this means for the future, well, from an investment perspective, obviously, if we are reducing our interest rates, it means less return on investment ultimately for anybody who wants to invest here versus another country who might not be cutting. So if the US, for example, are not cutting their interest rates, it means that if you're going to be investing there, you're going to be making more money by investing in the US as opposed to us, where our interest rates are lower. So a lot of factors that have to be taken into consideration before a rate is cut, and what that means for not just the citizens of the country, but also for the economy of the country as a whole.
Yeah, it's not an easy time for the Reserve Bank governor, nor for the finance minister. But just as we wrap up, it's obviously Women's Month, and I wonder what advice you have for people navigating this precarious situation, but also just the policy shifts that are necessary in terms of the impact and just because of that gendered economic outlook, given the and fostering financial resilience. What more could be done at this point to ensure that there's more cushioning?
Well, I think, one of the things we'd love to see, and I know this has been a conversation that's been ongoing since Budget 1.0 came out, was the fact that looking at, increasing that zero VAT basket, we really have to review the items that are, for example, zero VAT and see what are critical items. Because as I said, the CPI figure that came out, one of the biggest drivers of the increase of the CPI was food. So we need to go back and say, okay, well, which of those items are absolute essential, and see if we can start looking at zero VATing a bit more. And then, from the whole picture in terms of debt servicing, I mean, like I say, the first thing we always tell consumers is go back to your budget, make sure you're cutting back, know where your money is going, and really shop smart. Shop as smart as you possibly can. Use your community papers, know where the specials are when you are planning your budget. Try and avoid impulse purchasing, etc. But, the reality is most South Africans have already done that. It's not a case of us spending money on luxuries anymore. It's literally a case of, what can still fit into my basket in terms of can I afford it, and what is now, like I said, become a luxury, unfortunately.
Yeah. Well, Annaline, there's more questions and answers. You obviously alluded to that imaginary crystal ball that's obviously hanging and being played with ahead of those US tariffs imposition and what ultimately is going to come as a result of that. But thank you for your time at this hour. Thank you for also sharing your views on gendered economic impacts, obviously just during this Women's Month. It's clear women in South Africa are not just consumers, but they are the backbone of our communities and of our markets and homes at large. And thank you for weighing in at this hour. Annaline van der Poel, Rescue COO, chatting South Africa's economic outlook this Women's Month.